Happy weekend, Maverick Traders. This is Rod Reinhold. This is the Trading Room, and let's just jump into it. I cannot believe we're in November now. This year's almost done. If this is your first year trading, it's always fun to stop. We do a whole video about how to look back on your year and make really positive changes. So we're almost getting to that point, but we still have 2 months to go. In this session, we're being talking about the news of the week. There was a lot of news, and we're going to talk about sector rotation. Lots of sectors rotating, and most of them to the downside. And I've got a bunch of trades for you, some long, some short, some sideways stuff. Let's jump into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
So let's first off start off with what happened last week. We got new highs. We had a monster gap up on Monday and actually buying on Monday. However, if you looked at the market internals on Monday, there was more down stocks than up stocks. And in fact, the first 3 days of this week, where we hit new all-time highs every day, it was on less than 50-50 advanced decline line. Ironically, on Thursday was the only day, which was the worst day of the week, was the only day where there was a positive advanced decline line showing that people were rotating their money. And then on Friday, the wheels kind of came off, major gap up and fell. So the market's in trouble. We'll take a look at the chart, but it is still bullish, but there are definitely some signs that there could be some rotations coming. This week, we heard news from President Trump in Asia, major deal completed with South Korea, and the South Koreans stepped up and gave some money to the U.S. for some concessions. We also heard some positive signals coming out of the U.S. and China trade deal. Now, this is the biggest one. This is the one that everyone cares about. And over the last 3 to 4 weeks, ever since the big freak out of, hey, we're going to slap tariffs on, we've pretty much only heard good news that they are coming to a deal. If that deal is done, that's going to be very bullish. If it's not done, it is going to be bearish for a second. But it's one of these things where I think both countries need to get a deal done. It's just too catastrophic if they don't. And so I think the world knows that. I think they know it. They're likely to get one done. Ironically, on Friday, President Trump said that there are going to be no more negotiations with Canada. So he has shut the door on Canada. But again, the taco trade. The Trump always chickens out. Of course, we're going to negotiate with Canada. But as far as right now, it doesn't look like it. And we had some good earnings overall. This was the week of earnings. We got Microsoft, Google, Amazon, Apple. They all went higher. They all had good numbers, all went higher. Meta was the only one that missed earnings. And yes, they missed some earnings, but they beat on revenue. They are still spending a ton of money on AI. So really good news in those Mag 7 AI sector. Outside of that, earnings were so-so. They were okay. And that's exactly where we saw the market move this week, was in those large caps. All right, we did have a Fed meeting as well this week. We heard from Chairman Powell, and they cut as expected. But then he came out and said, do not think that December is a done deal. The odds of a rate cut in December were sitting at 96%. And then after the meeting, it's dropped down to about 65%. So the market had to take back some of their rate cuts. What happened is the Fed cut rates and the bond market went up. The bond yields went up. The dollar went up. Why? Because they had to reprice their future expectations. So it's a strange thing to see. You get a cut from the Fed and all of a sudden mortgage rates go up because of it. It's a weird thing, but that's exactly what happened here. The government is shut down, so we're not going to get a lot of data. Let's go in and take a look at the analysis of the market and look at the final numbers. We still had an up week. We still had an up week in the Dow and S&P. Look at that monster week in the Qs, up 2%. This is on back of like 3 and 4% gains the weeks before. Monster moves. The Russell was down and down fairly significantly. This is the real push and pull of this market here, is that stocks that really depend on interest rates economic growth. Stocks that are not profitable and aren't looking to be profitable, they're actually looking really sketchy here. They're looking really bad. But then you've got, the Mag 7. There's just the sky is the limit. It's going to be really interesting to see which one of them wins here. Gold, another down week. I've been talking about this for the last 2 weeks after gold went parabolic. Whenever something goes parabolic, it pretty much goes parabolic on the way down, and that's what we're seeing here in gold. We did have a nice little bounce at the end of the day on Friday. We'll see if that can carry through. Let's go ahead and take a look at the S&P chart. And I've got the S&P and I've got the RSP. The S&P, again, gapped up. Everything was beautiful. This move here is a little bit parabolic here. It's at the end of a long run, and it is steep and crazy. And you can see that we got a gap up and selling, another gap up and selling. So the market had all this momentum, and yet every time it gapped up in the morning, showed up to sell. We have a gap down from Meta earnings, and you can see people showed up to sell. And then we had the great news with Amazon and Apple on Thursday night. Friday morning, everyone was in party mode, gaps up, and again, people show up to sell. This is fairly negative price action, and I think we are going to see some more downside here. But look, it's not a big deal. We've got major support right here at 67.50. I think we go down to there, so another 100 points in the S&P. That's like 1.6%. So this is the S&P. And remember, 11 stocks account for 40% of the S&P. We come over here to the RSP, and all of a sudden we're starting to see some problems. We're breaking below moving averages, but it doesn't stay down there much. Here is the encouraging thing. On Thursday and Friday, when the rest of the market looked terrible, look what happened. Oh, buyers showed up. Here's the big question. Is the market falling here, or are we going to see some rotation where we see those 11 mega cap stocks start to give money back, and we see that money go into the rest of the market? I am not looking for a bearish market here. What I am looking for is rotation, and we'll see if that happens. Now look, this market could stay very narrow. We could see those 11 stocks keep going up and the rest of the market go down, but that typically doesn't happen. And just to show you an illustration of the week, here's the week. Look at that heat map. You see those big green squares, they hold up a lot of weight. And not just big green squares, but look at this. NVIDIA up 8%. They didn't even have earnings. They're up 8%. Do you know how much that covers of stocks that went down 1%, 2%, 3%? That covers so many little losses. And we have Amazon. Look at how big this one is, 9%. Google, 8%. That hides a lot of weakness that we saw around the rest of the market, and that's what we saw. So let's talk about the outlook for next week. Again, this is my opinion, what I think is likely to happen. The pullback is in effect. I do think we're going to start to see some money come out of the big tech. I think we're going to see that happen. However, does the money just go into other sectors? So that for me is just the question. Does the money come out of this, Mag 7, and where does it go? Does it go to cash, or does it just get reinvested in other things? If it goes to cash, then all of a sudden we're looking at a pullback across the board in all markets. If we're looking for a rotation, then it's going to be just fine, and the average stock is actually going to do better than it did this last week. This market is showing signs of exhaustion. Those 4 candles that we just took a look at, that is a clear technical sign that we're having a hard time going any further. Gap ups and selling off is definitely not a good sign for this market. I think the dollar and the 10-year bond are really going to be the key. They moved up this week. If they keep moving up, it is not going to be good for stocks. It just is not going to be good. If they stay basically flat or even go down, that's going to be bullish, and I think we see a resumption of the trend. And I guess we can say that earnings have pretty much wound down. There's plenty of stocks announcing earnings this week, but nothing of note. And we really don't have anything big until we get to NVIDIA in probably 3 or 4 weeks from now. This week was supposed to be a busy week because We have the first week of the month, so we have the employment report. We have all these reports. We're not going to get them because of the government showdown. Haha, that was a slip of the tongue. I meant shutdown, but I said showdown. And yeah, that's pretty much the same thing that's happening. We're not going to get employment report. But here's the cool thing. We get reports from both the public and the private sector. And government reports are not there. However, we're going to get plenty of private reports this week. The ISM, Institute of Supply Management, is a private organization. We're going to get their PMIs on Monday and Wednesday. We're also going to get JOLTS job openings. That's a private organization. And we're also going to get the ADP employment report. Typically, this report comes and goes and no one cares about it. Now, with no employment report on Friday, this is the employment report. This is the one that's going to make this market move, and everyone's going to be watching it. So this week, employment report is on Wednesday for all intents and purposes. Watch that number. You can see 30,000 jobs. We'll have to see where this goes, but the market is going to be moving on that number on Wednesday. So where are we now? We're to +3. Okay. We talked about this in the summer, and we talked about how, again, markets are always changing. And it's why you always have to be adjusting your trading plans, is because fundamental things do change in markets. However, how and when you do that is very important, because you can't just be fiddling with your trading system every time something you see you don't like. So right now we have the S&P is really being driven by 11 stocks. It's not really a good representation to look at see how the stock market is doing looking at the S&P. That's just not the case anymore. It used to be, but today it has changed. When those market caps get so large, all of a sudden it is not a good representation. So we've been throwing out the RSP, the equally weighted S&P 500, where every stock has the same weight as all the others. Why don't we just make a change to that? Well, you know what? We are absolutely most likely going to do that, where we no longer score the market +3 to -3 with the SPX. But we can't just make a change because we don't like what we see. And we talked about this in the summer, and we said, you have to do something like, if this doesn't change by the first of the year, I'm going to make the change. Meaning, it's not an emotional decision. It's not, hey, it's not working right now, I want to bail and go to something else. If you do that, you'll just keep jumping around. So understand that we are likely going to be making this change, but we need to do it in a responsible way as a trader, where we're not just trying to cherry pick data that we no longer like. So we're going to stick with what we've done, likely through the rest of the year. +3. We're scoring the S&P. We're not scoring the RSP. We're scoring the S&P. It's a +3. So it tells us we've got to be overly bullish here. Let's jump into those sectors. Let's take a look at this sector chart. It is ugly and nasty. Now remember, the markets went up this week. The markets went up. But look at how nasty these moves are. Materials slaughtered. Real estate slaughtered. Consumer staples killed. Utilities killed. Everything else down. Consumer eked out a 1% gain. That's it. That's it. Everything went down this week except for tech and a few consumer names. And again, the consumer names were likely Teslas and Amazons. If you take Tesla and Amazon out, consumer was probably down as well. This was not a great week for the market outside of the Mag 7. So let's go ahead and score these sectors +3 to -3. Utilities was one of our favorites. +3, no longer. No longer. We did not bounce. We did not have a bounce. We fell apart, and we're sitting here right between the 20 and 50-day moving average. They're flattened out. That's a 0. Coming over here to communication services. Last week it was a 0, and this week it's a 0. So again, moving averages flattened out, one going up, one going down, no highs or lows being broken. That's a 0. Now again, let's go back to this. Remember, what's in this sector is Google and Meta. Take those stocks out. What is this sector really doing? It's probably falling quite a bit. All right, coming into real estate. Real estate had a nasty week this week. Big drop down, but we didn't break a low, and we actually had 2 green candles on Friday. Look, I'm not saying go out and buy real estate, but I think it's early to get short. Until we really break out of this range, it's just a zero. Those moving averages are flat, and if you have reacted to every single one of these little moves, you've gotten shaken out of things. So we're going to stick with the zero in real estate, no change. Okay, this one was a +3, and it weakened. It weakened, but again, good candles on Thursday, Friday. The buyers were coming back in. We just had to downgrade it to a +2 from a +3. Still looking strong. Industrials, look at those candles. Candles on Wednesday, Thursday, and Friday that were green candles. More people were buying than selling on the 3 days that the market tanked. So it's a +1. You can't say anything more than that, but this sector held in very, very nicely. I do like industrials for longs. We already have some longs in industrials, so I do like it. On the other hand, financials weakened. We were at a -1 last week, and now we're at a -2. We got some decent buying here. I wouldn't rush out to get aggressively bearish here because every time it's gotten down to this level, we've seen some buying coming into it. But I just don't think it looks good overall. Here we have consumer discretionary, and you can see we had huge falls and then huge gap ups. That's going to be all from Amazon and Apple. So take out Amazon and Apple, it probably is a red candle, would be my guess. With that being said, we can't just pick and choose which times to follow the sectors and which times to not. We have to go with the +1 in the sector. This is where the pain was. There's 2 sectors that felt a lot of pain. This is consumer staples, and this is tumbled. This is tumbled. This is broken through support lines. We now have the moving averages sloping downward. It's not even a -2. This is a -3. So this is where you want to be short. Here is tech. And yes, tech had some red candles, but it didn't go anywhere. It didn't go anywhere. Yes, I expect it will probably pull back a bit, but it is still the strongest sector out there. Here's another one that's in trouble. Materials. As you can see here, we broke through support. We're tumbled. Moving averages are crossing down. This gets a -3. It's kind of crazy to have some sectors at -3 when the markets are at all-time highs. We're just right up to it. And then here's energy. Energy was a 0 last week. It's a 0 this week. Okay, it's just sitting there. I found some great sideways stuff in energy, so much that I had a hard time picking out which one I liked the best. Here's where we were last week. We had the clear outperformers, and then we had everything else a little, I use the term soggy, a little soggy. Well, what happened is we got some deterioration. There was nothing upgraded. Think about this. Nothing got upgraded on an up week in the markets. Just think about that. Staples materials go to a -3, financials down to a -2. We got real estate moved down to a 1, and we have healthcare and utilities moved down. It's just showing you that underneath tech, the market is, I'm going to use the term soggy. I'm really interested to see that if and when the technology Mag 7 break, when they get some selling, does the money go into some of these other ones? So I don't want to get overly short. I definitely don't want to get overly short here. I have to follow the system, and right now you can see that mostly it's going to be close to 0, +1, -1 on most of the trades. Here's where we were last week. We had 5 trades roll off, and all 5 trades rolled off for great gains. So we had the trade desk in the consumer services sector. That was a moderate gain on a butterfly. And then we had the XBI biotech ETF come in for a max gain. On consumer staples, we had Coke at 69 on the butterfly. It closed at 68.90. I've only twice in my life had a stock close right on the butterfly to the penny. Twice. This one, 10 cents, max gain, really nice. We had a bullish trade in technology, which was Intel. That was a max gainer. And then we had a bearish trade in energy, EOG. That was almost max gain. 105 was max gain, so it closed right up above that. So great week as far as trades rolling off, but we've got more trades to put on. We've got to follow our system. It's a +3. And at a +3, it says, here's your slots available to you. If you remember a couple of weeks ago, when you had that really nasty Friday, I talked about how bearish I was. But I said, I love this system because it won't let me get as bearish as I feel because of the slots. And I follow the slots. I feel the same way today as I did 2 weeks ago. And guess what? 2 weeks ago, it saved me because I couldn't get overly bearish and the market bounced up. And I ended up having a great week or two after that bounce because my system saved me. It saved me from myself. We're in the same situation here. I would love to get more bearish in this, but because of the slots, because it's a +3 market, it's not allowing me to. So I am going to be opening up a 0 trading communication services, -1 in real estate, +1 in healthcare, and then -2 in consumer staples. And you can see that that's all I can do. I'm not allowed to do more than that. That's as bearish as I'm allowed to get. So at this point, this whole portfolio is still leaning slightly bullish, even with new bearish trades to be put on. Let's take a look at some of those possible trades. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. In the comm services sector, we had already decided we're going to be a neutral here, so I'm looking for something that's sideways. Okay, here's Reddit. I typically avoid these super high volatility stocks for sideways because it's just so difficult. Volatility, I always think a butterfly where you have to hit the bullseye. You're trying to hit the bullseye and you've got a volatile stock. That's like the target moving really fast. How fast does the target move? Your odds of hitting a bullseye are very, very low, almost impossible. I like to find things that aren't moving all that much. So I feel like, okay, I can throw a decent dart and possibly hit this target. Reddit, though, if you take a look at its past volatility over this past month, it's really low here. And yes, we got more volatile as the market started to get a little bit more volatile. But in the most part, we really can take a look at a range here, 190 up to 240. I like that range quite a bit. Here's the thing. I want to be a little bit more bearish than that. I actually like this window right here. This window where you're opening it up saying, hey, I don't think it's going to go above 230. Earnings are already out. Earnings have already been done. Big question is, do I want to be slightly bearish or slightly bullish? Stock closed at 208.95. I actually want to be a little bit bearish on this one. So I'm looking to do the 180, 200, 220. So this is going to be where I open this up. I'm saying I think it's going to stay in here. I don't think it's going to break below 280, and I don't think it's going to break above 220. I think it's going to be in here, going out 2 weeks. Now, if you want to be right at the money, then it's going to be the 190, 210, 230. But I do want to be a little bit bearish on this one on Reddit. Moving on next, we're looking at a -1 trade in real estate. So I want to find something that's bearish. This here is KE Holdings. It's a Chinese real estate company. And you can see it's been in this beautiful range here, 1750 up to 20. And we broke below that. We broke below it here. I don't think it's going to collapse. We're going to need, a collapse in China for this thing to really fall. But I feel pretty good that it's not going to go back up above 1750. I mean, that was a pretty major break. All I want to do is play this to where, hey, you know what? It just can't go up past 1750. So the way I'll do that is this -1 trade, an 1817. This is going to be probably about 60 cents. That means you'll have 40 cents of upside. 1740 is going to be your break even. That's the call. 1740. It doesn't go above 1740. If it doesn't do that, then this is going to be a nice gain. If it's close to below 17, it's going to be a max gain. So not a crazy trade here, but I really like this setup here on KE Holdings. Next up is healthcare. This is the only one we're going to be bullish. Okay, let's talk about this because this is literally the trade we exited on Friday. I never like to recycle the same trade because that trade has baggage in it. That's why I don't have a watch list. I don't go back to the same trade ever. I start over. I start over with what's the best market, what's the best sector, what's the best industry group, and then I go in and I say, okay, what's the best stock? I did that. And you know what I came up with? This one, the one we just got out of. It is by far the best looking trade in the healthcare sector. So it's the biotech stocks in an ETF. I didn't want to go into biotech because they've got, individual volatility. Just a beautiful chart, especially on a down week. There was buying all week long. People are still buying this thing. So just a beautiful high base. We determined we're going to be a +1, so it's going to be a pretty simple trade, a 110, 113. So it just has to go up and then we get max gain. Anywhere above 113 by November 14th, it is a max. You're probably, again, paying about 65 cents. So you'll have a 35 cents upside on this. So a 1 to 2 risk reward. It's a very high percentage trade. If you want to be a little bit more bullish, okay, go out another week, do the 112, 115. Biotech continues to be the best one, so I'm going to stick with it. Next up, consumer staples. This was one of the sectors that really started to tumble. I want to get short this sector. This stock is Mondelez. Okay, this used to be called Frito-Lay, which is a cool name. Everyone knows it. And then they changed it to Mondelez. And it's a dumb name. And everyone agrees it's a dumb name. And actually, who is the investor? Oh, Carl Icahn. He actually bought up enough of the company to be on the board of directors to force a name change because he hated it so much. He didn't win. We still have Mondelez, but that's the story. It's a dumb name, but guess what? It doesn't matter. It's just the name of a company. What does matter is we had a breakdown on earnings, and you can see there's no snapping back after a bad earnings report. It's just not there. So we have this major break of 60, and then we have just a lethargic movement. Remember, we're going to be a -2 on this one, so we do need this to move. This is the trade, the 58, 56, 50. So from here down to here. The stock needs to drop $1. If it closes below this 56.50, it's going to be a max gain about 1.5 to 1 on the risk reward. So a really nice trade on this. If you want to be less directional, look at that 59, 57.50, right at the money for Mondelez. And last, we're going to do a sideways trade on energy. There were so many sideways charts on energy. It was hard to pick. So look, either energy sideways or it's not. Your analysis on individual stocks isn't really going to matter. If energy trends, then all of these are going to trend. If energy doesn't, then everything will likely be winners. Here's the range I'm looking to play. You can see we've got some prior resistance over here at 52. So I'm really looking at 52 up to 57. That's the range I'm looking to play here. So slightly bullish on this one. So the trade is going to be 51, 54, 57. That's going to be the trade. Profit window is going to be right in here. I really like this one for a profit window, but there are plenty of other nice looking charts for sideways trades in the energy sector. Wrap this up. The pullback is in effect. It's happening. The only thing holding it up is those Mag 7s. We'll see what happens. We're likely going to get a pullback down to some key levels. And that bounce is going to tell me whether or not we're likely to see new all-time highs or if this is going to be a prolonged either consolidation or a pullback. We'll be watching for that. I think we're going to have a good idea by the end of this week what happens. And if you want to keep an eye on, I think what is the key? The US dollar and the 10-year. Those keep going up. It's not going to be good for stocks because that means there's less and less likelihood of a December rate cut coming. And the market has really already priced that in. They've already priced in rate cuts. And if they don't get it, they've got to reprice the market. That is the trading room. Thank you so much for joining me. Everyone have a great weekend. Goodbye, everyone.